So as it turns out, Trump wasn't really bluffing, and it's now kind of official. And Trump has shown his hand that, he has tariffs, and we kind of have a trade war on our hands. And even though these tariffs have been put on pause for now, and Canadians have a temporary sigh of relief, everyone's still looking for answers right now on what the heck is going to happen, right? Canadians are fiercely scrambling to understand what will happen to the economy and to real estate, specifically if you're watching this video in Canada. Where will housing prices go? The Bank of Canada is still announcing rate cuts right now in 2025. The bond market is going down and it's very volatile. The loonie is super weak right now and probably going to continue going down. The Canadian economy is kind of on the brink of collapse if we hit the tariffs. And quite frankly, nobody can predict with any certainty where the heck the markets are going to go. Everything is so volatile. It's highly speculative, especially with Trump's policy being so bold and, shall I say, erratic. Anything can change, and it will change very fast. So it wouldn't surprise me that if Trump puts on even harsher policies down the line further to get his way. But what is certain is that Canada's GDP is going to take a massive hit if we get these trade wars. And with 21% of Canada's GDP being exported to the US, that's a fifth, tariffs would bring about like a seismic shift in the economy. And there's already talks with Canada bringing back pandemic level economic relief, which really scares me. It doesn't help either that the Canada, doesn't really have a real government in Parliament right now. So we definitely have a major problem on our hands. And Canadians are already struggling with housing prices and inflation on the cost of living. And these tariffs will just make matters worse. But perhaps there's a silver lining in all of this. The Bank of Canada will likely see all of this as a threat to inflation and the economy. So there's a higher probability that they will continue bring interest rates down even more and lower than what they already expected. Homeowners will have an easier time with their mortgage renewals. So keep watching to see how these tariffs could impact the market and the rippling effects that it could have on the Canadian housing market. Hi, my name is Zen. If you're enjoying my data-driven and number-crunching real estate updates, be sure to like and subscribe. So according to BMO's prediction, GDP growth will get to 0 if tariffs stay in place for a year. Previously, Bank of Canada predicted that we would see GDP growth in 2025 increase to 1.8%. I didn't really believe that, but that's what they say. And 17% of Ontario's GDP already goes to the US. And that's going to affect us locally. So the Canadian dollar will continue to weaken to the US as according to BMO. And the Bank of Canada is expected to cut their overnight rate to 1.5%, and they originally predicted 2.5%, meaning there's another 100 basis point or 1 whole percentage cuts, which means that variable rates are coming down some more. Now, the bond market is moving down right now as well, meaning that fixed rate could potentially come down if the banks pass over those savings. The supply chain will likely be messed up, just think automotive and manufacturing. Chaos, just utter chaos. Remember, this can all change, and despite everyone looking online for answers and everyone reporting about the news, no one is going to be right. Predictions will be wrong because there's going to be new outputs, and when there's new outputs from Trump, we need new inputs to adjust. So everyone is just in search of some certainty, which is what I talked about before, but I just don't think it's happening anytime soon. Now, this is why real estate is going to be partially put on pause. A lot of people don't want to be making a really big purchase, call it $1 million plus, in a time of uncertainty, especially if they're going to be affected by the tariffs for their income, call it jobs or business. The market activity will slow down starting now, and we'll need to adjust accordingly to these new policy shocks as we've always had. Any big new policy shocks we've had in the past, the market freezes and adjusts, and this is exactly the same. And again, especially if your income is derived from manufacturing or automotive, where stuff goes in and out of the border, that's going to affect you a lot. However, I do think the silver lining in all of this is that a lot of white collar jobs, call it like Bay Street workers, they're not going to be too affected by these tariffs from an employment perspective or a business perspective. And this is why I think there's still going to be sales. It's just less, especially those who are right now looking to upgrade their home for family reasons, like a growing family, or for those who need to downsize, or deaths and divorces, These will all happen. It's just in aggregate, the sales should be lower. Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, put decades of experience to work for you. Then we also have our internal Canadian problems where we don't really have a prime minister. Parliament's on pause or prorogued. And NDP seems to want to support pandemic level benefit packages and push back the election, which really, really scares me if they try to do that. And this is not in a sense that like, oh, hey, I think the real estate market's going to be crazy again if we have, like pandemic level responses. I don't think so. I don't think it's going to happen. That really was like the perfect storm of like cheap money, helicopter money coming down, people trapped in their houses, and negative real rates. We're not there right now. We have one of those four factors. That's why I don't think the real estate market will go ballistic because of these responses. But the response in the market will just be dictated by the level of response that the government's going to have, which is what's going to dictate the real estate market. The amount of stimulus in the way they give it is going to dictate the market. And that we don't know for now. And this is why for the time being, some people are just going to put their real estate search on pause, right? Effectively reducing demand. Now, as for the direct impacts of the tariffs on the real estate market, this is what I suspect. And remember, I can be wrong. It's just what I think right now. Investors are scared even more. Investors were your, call it discretionary buyers. They didn't have to buy, but they would like to buy. It was opportunistic. So, maybe call it marginal at best. And with all this uncertainty out there, they'll likely stay away from the market or proceed with a lot of caution. This means that the condos will have an even harder time this year than I predicted in my previous videos. I had said previously that, prices would at best stay flat. And I think they're probably going to come down now if we have a prolonged period of tariffs. The entry-level freehold properties will probably continue to do well because the big demographic shift of the millennial cohort is still trying to move and have a growing family. And, if they have a non-tariff related job, call it like white collar Bay Street job, it's not going to stop them from upsizing. The challenge really is that, for this cohort, that if they need to sell their condo first to realize the equity, they should probably do it sooner than later. Now, downsizers are probably your biggest winners in this market, going from like a high demand asset, call it like ground-based freehold property, to a lower demand asset, call it like a larger condo. Mortgage holders in Canada will also probably benefit. We're scheduled for like 40% of mortgages to renew in the next 2 years. And if both variable and fixed are coming down right now because of the tariffs, I think that's going to soften the already overblown mortgage renewal cliff. That should, in theory, reduce the amount of like new listings coming to the market that are supposedly distressed from the mortgage renewals. Where additional listings may come if tariffs stay in place for an extended period of time are that if people lose their job and there's basically no way for them to pay their mortgages. So what I would say is as unemployment rate increases, I suspect listing will as well. But it takes time and we have to see a lot of the discretionary income be sapped, the savings be sapped, and then we'll start seeing the discretionary real estate properties listed first, such as your cottages and your investment properties, because a lot of people are going to try to hold on to their primary residences as much as possible. And if you're renovating, be prepared to pay more for items that come from the US. Your big ones are like windows and appliances. Maybe because we create a lot of like steel, aluminum, and wood in Canada, it may be a little bit cheaper because we have surplus of supply, copper as well, just maybe. And if you're an investor right now, analyze your portfolio, see who is at risk of being affected of these tariffs, and then potentially be prepared to have late rent or missing rent if they're going to be caught off guard and they lose their job. That's very important right now. And then reposition your portfolio so that you can hold on for longer in case you lose your job as well. Right now is about surviving and then you can thrive later. This is about risk mitigation and damage mitigation because we just don't know what's going to happen. So those are my thoughts on what's happening in the real estate market, depending on which part of the real estate market you are. And as things are changing rapidly, I'll continue giving my updates. Now, if you're wondering how low mortgage rates can go this year with all these tariffs, watch this video over here where I talk about the interest rate predictions from a lot of the big banks. The only difference now is that if we are going to get this tariffs, as per BMO, we should expect another 100 basis point or a whole 1% lower on the variable in this video. I'll see you in the next episode. And remember, your move, your future. See ya!